please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back to Bazaar Morning Call. It's flat for the markets now. The mid-caps are picking up a bit, but Manisha Gupta joins in to give us a roundup of all that's happening in the commodity and currency markets today. Hi, Manisha. Good morning.
Morning, Sonia. Thank you so much for that. Well, as have been watching in the global markets, there is strength continuing for the crude oil prices, and that's what we've seen in the Indian markets as well. More buying coming in, and we are now inching towards that 4,600 per barrel mark for the Indian MCX prices there. Well, it is about the strong demand estimates from Asia. You have the geopolitical concerns still on, and there is elections in the month of May in Venezuela and Iraq, and that is what the markets are watching out for. And of course, it is the 12th May meeting, or rather a decision that the US will take on whether or not to reintroduce sanctions on Iran. That, of course, is a big, would be a big game changer there. Markets are betting a $5 up or down depending on what US does with Iran. So that is going to be the most important event to watch out for. The gold and silver prices have been under pressure, with the US dollar now inching up, trading at a 2-week highs. We have seen pressure come back in case of gold. Silver, of course, has been trading quite flat, taking some cues from the industrial demand and the industrial metals as well. And industrial metals clearly has been a very wild story overnight. We did see the nickel and the aluminum prices decline between 6 to 8%. And while Asia is trading slightly in the negative, aluminum prices for one continue to be under pressure. And nickel, of course, flat on your screens. This is after nearly 6% decline that we have seen overnight on MCX as well. The other metal markets, of course, have been reacting to the manufacturing data that came in yesterday from Europe and US. That has been on the positive side, and that perhaps is helping some buying that you are seeing in the other metals there. Trading strategies, and we have them from Angel Commodities today. It's a buy call across sectors coming in from them, especially for the lead and the crude oil prices. They have come out with a buy call in the intraday market.
Okay, thanks a lot for that, Manisha. Well, let's focus on the sugar sector now. It is in focus as the government, in an attempt to help mills clear dues worth 19,000 crores to cane farmers, is exploring a sugar cess, a GST cut on ethanol, as well as subsidy to growers. Now, let's find out if all of this, has an impact on the sector. M. Manikam, the Executive Vice Chairman of Sakti Sugars, joins us now. Mr. Manikam, any positives that you see here for the sector as a whole?
I don't think they've addressed the fundamental issues, because putting a cess and giving it back to the millers, actually you will have, it's a zero-sum game. So I don't think it's going to really, because the cess is there, the sugar price will go down further, and then the government compensates us back for it. So I don't think it'll be a major impact, because this was tried last time and didn't stop the cycle any. In fact, it increased the cycle volatility higher. So I'm not really seeing a very comfortable situation going ahead.
Okay, good morning, Mr. Manikam. Yes, the debt is very huge and ethanol may not fetch much. How much can ethanol fetch at all? What is the ability of the government to even execute it?
I don't think government is going to be able to execute it. See, because we are dependent on oil companies to sell ethanol, and oil companies are not very keen. They're being forced by the government to buy. So we should probably go the way of the US, where ethanol producers are allowed to sell fuel. So we should be able to sell it blended with petrol bought from them and sell it at a price with the tax breaks. So today petrol is selling at 72 rupees. So if we get even a tax break, we should be able to sell around 60 rupees into the market, and we should get a advantage, and maybe all the cities can use it, the pollution can go down. So the change has to be that the entire fuel policy has to change, and we should go like what the US does. The US, the ethanol producers themselves sell the ethanol rather than selling it to petrol companies.
That's the ethanol bit. What would your wish list be with respect to the arrears of the current year? I mean, in any case, ethanol would have met a very small part. What is ISMA's wish list or yours?
See, right now in South, we are lucky that we had the drought, so we don't have those kind of areas. Right now, I think we were crying about the drought so far. Now maybe it's a blessing in disguise that we don't have a lot of cane where we built up these kind of areas. It's particularly in UP that they're going to have this problem. And the fundamental issue is high cane prices. So I've been saying time and again, until we address the high cane price and reduce the cane price, this problem is not going to go away. So we should give signal to the farmers that we don't need so much cane that they are producing. The only signal that the market understands and the farmer will understand understand, is a lower price. So I think the government of India should look at, in fact, I think recommended earlier as well, maybe not increasing the price at this point of time, the FRP, at least keep it at the same level, because by announcing another 200 rupees increase in FRP, you're only going to send a signal to the farmer to produce more when we don't really need more.
So what is the average price expectation over the next few months? Currently, I think it's around 30 rupees or so. Do you see it move a lot below that?
It could move a lot below that because the government has put some restrictions on sales. So that's why it's kind of holding up. But if the production this year is going to be 32 million and the opening stock of almost 4, we have 36, consumption is about 25. So we'll close with 11 million stock. And the next year, we're expecting anywhere between 32 to 34. So we might add another 8 million. So, I mean, almost 18, 19 million will be the stock at end of September 2019, which is not good news at all.
All right. We'll leave it at that, Mr. Manickam. These are, every 3 years we get this problem when there is an excess of sugar output. So there is a deja vu, an action replay about this cycle, and still we don't learn about cane prices. Thank you very much. In an election year, the hope is much less. Well, that's the word on sugar. The ethanol policy change, even if it happens, not expected to really be implemented. And even if it is, very minor gains expected for an industry which is belaboring under huge loans. Well, just one quick look at the markets. It's actually now 1/3% higher, but the Nifty is still flirting only with the 10,600 mark, not able to cross that, and the blame falls entirely on the metal space. Hindalco, Vedanta and, Nalco is not a part of the Nifty, but Hindalco, Vedanta providing a bit of a resistance to the markets going over, and actually a bunch of other stocks, especially IT stocks, are not helping today. Tech Mahindra, HCL Tech, all of them not quite helping. There's Kotak Mahindra and IndusInd Bank as well, which at the moment in the red. So Nifty not quite being able to make the leap over 10,600 or 10,620. We'll come back to this, of course. For the moment, another stock beckons our attention. The Thomas Cook board has approved corporate restructuring in order to streamline its businesses into 4 key verticals. Madhavan Menon, Chairman Managing Director, Thomas Cook, is joining us on the phone line. Mr. Menon, good morning. Well, this is a host of announcements. Can you just explain the key aspects of your restructuring exercise?
The Thomas Cook board announced a restructuring of various elements within the Thomas Cook Group in its capacity as a holding company. One of the aspects was to demerge some of the human resources businesses that are sitting in Thomas Cook and merge them into Quest. Simultaneously, it was decided that Thomas Cook, which has a holding in Quest, would distribute this holding to its shareholders. So the shareholders in Thomas Cook would become direct shareholders in Quest. The ratio of how the Thomas Cook holdings in Quest would be distributed would be 5.29 shares of Quest for every 100 shares held in Thomas Cook. So that is one aspect. There were various cross-holdings that existed within the Thomas Cook travel unit. For example, some of our businesses were held by both SOTC and TCI. We are now restructuring those holdings, and they will be held directly by Thomas Cook. A third aspect of this exercise is to convert both SOTC and TCI into pure operating companies. So as a result, all the real estate holdings are being taken upwards into Thomas Cook. Another aspect of this exercise is that all brands, be it TCI, SOTC, TC Travel, TC Forex, will all now be held by Thomas Cook. And there will be a license arrangement between the parent and the subsidiaries. Lastly, we are merging 2 companies which were acquired from Tata Capital, which is TC Forex and TC Travel into Thomas Cook India Limited.
Okay, so investors will get 5.29 Quest shares for every 100 shares that they hold in Thomas Cook. So post the demerger, can you tell us what business remains with the resultant company?
So the tour operating, the foreign exchange business, the inbound business will all remain with the travel vertical of the holding company, Thomas Cook Holding. Now, they will exist as they do today within Thomas Cook and SOTC and TCI. None of that will change.
Okay. The financials, how will the balance sheets and profitability change?
Revenues are as they stand today. There will be no change in the profitability or the revenue or the balance sheet structures of any of these companies in the holding group, of the travel holding group. So it's important to recognize that the only potential change is that we will take the proportionate profits, the profits of Quest, which are proportionate to our holding, effective March 31 going forward, and till the scheme is concluded, after which the Quest profits will no longer be reflected in Thomas Cook.
So what about the shareholding pattern? How does that really change post the restructuring? Any change in Thomas Cook's shareholding at all?
The promoter shareholding in Thomas Cook does not change. It remains where it is. The indirect shareholding that the promoter, Fairfax, had in Quest will now be a direct holding, which will be approximately 33% post-distribution of the shares.
And what about Sterling Holidays?
The Sterling business remains a portfolio investment for Thomas Cook India Limited, and nothing will change there, except the holding. Sterling will become a wholly owned subsidiary of Thomas Cook.
Okay, thanks a lot, Madhavan, for joining us. And now for the other side of the story, Subrata Nag, the Group CEO of Quest Corp, joins us now to talk about that. Subrata, thanks for joining us. Now that the restructuring is complete, how does life for Quest Corp change?
No, I don't think that life will change. The business will go as usual. We have very strong tie with Fairfax Group as of now also. I think only their holdings, they were holding through Thomas Cook, so that will not be there, and they will become a direct shareholder. I think it will help us, exploring maybe future opportunities and our, in all other matters. I think it will have a more positive impact.
What I was meaning to ask you is, how much of the of Thomas Cook's HR business will you be taking on board, and what would the revenues, the size be?
I think that is a very not a very significant amount of business. Their training and learning business and the tour management business will be coming to us. But overall revenue and profitability wise, it will not make a huge impact, as far as Quest overall business performance is concerned. Okay,
wait. Now let me get your shareholding right. Now in the post-restructuring world, Fairbridge will have 33%, 33.1%, Ajita is at 12%, Net Resources 10.6%, and that's the total is 55.7%. So that's promoter holding.
That will be the promoters holding. Yeah.
Okay. Now, have you been speaking to any of the, PE guys? Do they want to increase stake?
Are we talking to any PE guys?
Yeah, I mean, are you any of the current shareholders? Are they likely to increase their stake?
I think we meet a lot of investors, and there is a lot of interest of our shares among the investors. And if there is they have an opportunity, I think definitely they will look for increasing their stake. But I don't have any specific proposal or specific discussions going on with anybody.
Do you need money for expansion?
No, I don't think we need money for expansion. If you know that we did an IPP last year and we raised 873 crores. Part of that money has already been deployed in various M&A activities, but we are still holding a substantial amount, and we are having a good cash internal accrual. So I don't have any immediate need for any cash or going to market for raising any money.
Do you see your margins improve further from this 5% level anytime soon?
Yeah, see, if you track our company, if you last few years, every year we have been increasing our margin, a little bit. And I think the current year also, our overall margin first 3 quarters, there was a upward trend, and that trend will be, remain so. And the new acquisitions, whatever we are doing, I think all are, margin accretive. So I'm sure that overall margin will be increasing in the coming days also.
Will you look at scaling up the business, the other business that's now coming to you from Thomas Cook?
We have a substantial large training business. We're running almost 80 plus centers in India in the skill development. So it will add into that business, and it will open up in the hospitality sector and for us. But as a overall, I don't see it will have a huge impact on our training business.
Okay. We'll leave it at that. Out of time, Subrato, thank you very much for joining us with your with the details of the restructuring this morning. As we wind down on Bazaar, actually markets have given up a little bit of their gains. The Nifty Bank in particular, after rising about to a 0.6% gain, it's now up only 0.25%. So a decent amount of profit taking has happened in the Nifty Bank space.